The Central Bank of Sri Lanka returned to the USD bond market successfully, pricing a new issuance of the $1 billion US 5-year and 1.4 US billion 10-year senior unsecured fixed rate bonds with maturity dates of March 14, 2024 and March 14, 2029 respectively.
The bonds have been rated B2, B and B by Moody's Investors Service, Standard & Poor's and Fitch Ratings respectively. The release added that the transaction saw strong interest from a wide range of high-quality investors, which allowed Sri Lanka to tighten final price guidance to 6.90% on a 5-year tranche and 7.9% on a 10-year tranche. However, financial experts allege that when compared with other countries, Sri Lanka is obliged to raise debt at such interest rates from leading international buyers due to the central bank bond scam that took place 4 years ago. At present, the effective interest rates in the US market is approximately 2 to 8%. Each country is given a certain limit when raising debt. Based on the current limit and ratings of Sri Lanka, our country falls under the B category. When a country plans to raise debt, potential buyers and investors consider ratings and limits prior to their investment. The international community with no doubt considered the central bank bond scam as well as other incidences that unfolded subsequently. And the prevailing situation in our country, not only did the central bank bond scam take place, the manner in which the government suppressed the scam from the law will make potential investors and buyers think twice prior to investing in our country. On the 7th of March, international sovereign bonds worth $2.4 billion was issued in the US bond market at very high interest rates, with maturity periods of 5 and 10 years. The interest rates of some bonds are 7.2%, while some bonds have an interest rate of 8.2%. Even during the war or when our country was facing a severe economic crisis, debt was never obtained from international markets at interest rates as high as 8.2%. Therefore, we warn the government. Raising commercial debt at such high interest rates in the international market creates a doubt among us as to what will be the fate of our country. Meanwhile, Thailand trade 10-year bonds at 2.51%, while Vietnam at 4.78%, Greece at 3.84%, Malaysia at 3.87% and Botswana at 5.27%.